Did you know that understanding debits and credits is the foundation of accounting? It's true. Whether you're a business owner, a finance professional, or just curious about how money moves around, grasping the concept of debits and credits is essential. These two terms form the backbone of the double entry bookkeeping system, which has been the cornerstone of modern accounting for centuries. So if you're ready to embark on a journey into the world of numbers, balances, and financial transactions, you're in the right place. Get ready to unravel the mystery of debits and credits in this captivating video. Unlock the secret to financial success with Counting Coins, where numbers come alive and your accounting game thrives. Hey there, and welcome back to our channel. Today, we're diving deeper into accounting basics by exploring the fascinating world of debits and credits. If you missed the first video in this series, no worries. You can find the link in the description below. Trust me, understanding debits and credits is going to be a game changer for you. So get ready to broaden your accounting knowledge because I've got a handy tip that will make everything clearer. Are you excited? Great! Let's jump right in. Before we dig into the nitty-gritty of debits and credits, let's clear up some common misconceptions. First off, debits and credits are not inherently good or bad. They're simply words we use to describe the two sides of financial transactions. Second, they're not the same as basic addition or subtraction. Instead, they represent the dual nature of every transaction. To help you visualize this concept, imagine debits as the heads and credits as the tails of a coin. Just like a coin has two sides, every transaction has equal and opposite effects on different accounts. Now let's get to the heart of the matter. In the realm of finance, money doesn't magically appear or disappear. It flows from one account to another. Accountants use debits and credits to track this flow of economic benefit. What exactly is economic benefit, you ask? It's the potential of an asset to contribute directly or indirectly to the cash flow of a business. So when we talk about debits and credits, we're referring to the movement of economic benefit from a source, credit, to a destination, debit. If you've liked the video so far, please give it a like, subscribe, and let us know in the comments what would you like us to cover next. Now back to the video. Now let's explore which accounts fall under debits and which under credits. Destinations where economic benefit flows include assets like cash, buildings, and amounts owed to you by others. It also includes expenses, which arise when a business pays a third party for goods or services, and dividends, where a business distributes some of its cash to its owners. On the other hand, sources from which economic benefit flows include owner's equity, which represents when business owners invest their cash in the business. It also includes liabilities, such as amounts owed to a bank for a loan or to suppliers for provided goods or services, and revenue. Equity is a bit trickier to understand. To grasp it fully, we need to break it down into its components. Don't worry, we'll keep the math simple, I promise. Equity is composed of owner's equity paid in minus dividends paid out, plus retained earnings. Think of retained earnings as the profit held for future use. Profit, in turn, consists of revenue minus expenses. So if we substitute retained earnings with revenue minus expenses in the accounting equation, we get equity equals owner's equity paid in minus dividends plus revenue minus expenses. Expanding this definition in the accounting equation, we have assets equal liabilities plus owner's equity paid in minus dividends plus revenue minus expenses. Now let's rearrange this equation to make it clearer. Dividends plus expenses plus assets equal liabilities plus owner's equity paid in plus revenue. The left-hand side represents debits, which increase when debited and decrease when credited. On the other hand, the right side represents credits, which increase when credited and decrease when debited. Now, here's the tip I promised you to help you remember all of this. Ready for it? Drum roll, please. It's dealer, D-E-A-L-E-R. If you ever find yourself unsure about which side of the accounting equation a term belongs to, just remember this word, dealer. Let's quickly recap the main points we covered. Debits and credits are words we use to represent the dual nature of financial transactions. Debits represent the flow of economic benefit to the destination, while credits represent the flow of economic benefit from the source. Debits include dividends, expenses, and assets, while credits encompass liabilities, owner's equity paid in, and revenue. All of these principles are reflected in the accounting equation, which can be expanded and rearranged as follows. Dividends plus expenses plus assets are equal to liabilities plus owner's equity paid in plus revenue. So, the next time you're unsure, just remember, dealer. I hope you found today's video helpful. Don't forget to comment below with your thoughts, questions, and accounting victories. And make sure to hit that subscribe button and turn on notifications. So I'll see you in the next episode of Counting Coins. Happy accounting!